President Trump, well, he wants to take the nation back to a time before 1913, before the taxes, before the Fed, when he says we were a rich nation using tariffs. Interestingly, and maybe shockingly so, FT published this piece. This from the Financial Times. Bond investors count on Trump's tariff revenue to rein in U.S. debt. I want to bring in now Bianco Research President Jim Bianco. Jim, lots to talk to you about. Listen, I have to say, if the court rules against these tariffs, you know, what do you think is going to happen? Because I got to tell you, this court ruling that we had just the other day, if this happened in April or May, the market would have been up. It would have sort of celebrated, and it wasn't up this time. Do you see, like, maybe the market's kind of getting used to this?
I think the market's hoping that the court ruling will not overturn tariffs, because if it does, it would be an inflationary event. We'd have to pay back what we've already collected. The amount of money that we are collecting, as the FT story said, to help lower the deficit would go away. So that could be a big problem if the court rules against it.
All right. And you know, of course, here's an interesting thing with respect to tariffs. There's a lot of folks out there obviously hate the tariffs. And this is one chart that someone posted that shows how hard tariffs shock corporate profits. So they showed 1921 and 1930, Smoot-Hawley, and the Emergency Tariff Act. In between there, though, you had the Fort Norman-Macomber Tariff Acts, which, by the way, some of the levels of tariffs are higher than they are now. And still, we had the Roaring 20s. Still, the stock market went up 600%. So, I mean, at some point, can't the market learn to live on higher tariffs?
It can, if all it is it's higher tariffs offset by lower, say, income taxes. Right now, we're taxed enough. And if we just add on top of that tariffs without, as Donald Trump has been talking about, you know, the External Revenue Service being the tariffs and the Internal Revenue Service pulling back on income taxes, yeah, the market could live with that easily, I think.
Yeah, I think that's part of the goal, though. Don't you kind of sense that, you know, the next step would be somehow giving us some sort of tax relief for individuals?
It would have to be, because otherwise what you're doing is you're just piling on more taxes on top of everybody else. So you're shifting where you're collecting the taxes from Americans to basically foreigners through the use of tariffs.
Now, let's talk about the market, right? And really looking ahead. This is a productivity chart going back about 20 years. And you can see distinctly how this is really a good example of American exceptionalism on productivity. We've just outdone the rest of the world. Today, we got some really shocking, I think positively shocking revisions on productivity. And many are saying this is the secret sauce for the market to rally a few more years.
It absolutely is. We have the big technology companies. We have been the creative, destructive economy that's willing to take the risk of trying new technologies, and if they don't work on, move on to something else. And that's why we have the productivity increases. And as long as we continue to have those, it's not only the secret sauce for the stock market, it's the secret sauce for the bond market, because productivity increases would help hold down inflation.
I'm glad you brought that up. Global bond market soaring, settling down a little bit the last 2 days, but still, obviously, this has been unnerving. You know, I read somewhere, though, that for all of the talk of policy, a lot of this just gets back to the fact that these are very old nations, that they're dying off, and that, you know, it's just gonna be a more expensive thing for their governments and so how much of this can be changed if that's the case?
That's going to be a problem. And when you say how much of this is going to be changed, we could look at the European economies, we could look at the Japanese economy, where interest rates are really going up a lot. It's hard for the U.S. economy, being the anchor between all of those, to kind of ignore that. When those countries are all starting to rise in yields, it is a pull for us to go up higher in yields as well, too. And it could be a real problem, because maybe we shouldn't be going up in yields, but they drag us higher.
I want to ask you about, speaking of central banks, what's happening here. So today, the DOJ opens a criminal investigation into Lisa Cook. Of course, there's a lot of hand-wringing, a lot of debate about what President Trump can or cannot do, and of course, the end or the independence of the Fed. What's your thoughts there?
Well, I don't worry as much about the independence of the Fed, because President Trump could replace a Fed governor here, a Fed governor there. He's got the right to do it for cause. But this idea that there's going to be, you know, massive epic change, that's a risk, but I don't see it as being a big risk right now.
If there is, though, more, let's say, push, pull, tugging, whatever, Goldman's coming out and saying that the sense that the Fed is losing or being damaged can take gold to 5,000 from here. You've talked about gold a lot in the past. Where do you see it going?
I see it going higher, but not necessarily
Not
for this.
5,000?
Well, not necessarily for this reason. I mean, I see it going higher because of what we talked about a minute ago, and that's what's happening in Europe with their higher rates and the loss of confidence in their economies and stuff. That is a positive for gold right there before we even get into this second derivative, whether or not there's a loss of Fed independence.
All right, so we got a lot of data out this morning. ADP, something of a shocker, but also coupling that with higher initial jobless claims, maybe what we got from productivity, unit labor costs, and some of the trends, right? Right now, the trends are looking lower. What do you think about tomorrow, the jobs report, and where does that put the Fed? Because you still have a few folks on the Fed who seem reluctant to say, hey, we're going to have a series of cuts, whether it's Goolsbee, Kaczkari, even Williams today had curious comments in my mind.
Yeah, I think the big thing that we're going to have to start talking about with the employment report is what is the break-even rate? How many jobs do we need to create to meet the population growth of the country? With the immigration way down, population growth is way down, we don't need as many jobs. Point is, maybe we print 75,000 jobs, which is what Wall Street expects. Normally, you would think that's a bad number. It might not be, because if we don't have millions of people coming into the country, we don't need to print much more than that many jobs.
What about, though, the AI factor? I know it's early, but, you know, you already see unemployment rates for recent college grads, certain categories. You saw it today, Challenger Grand Christmas, job announcement, layoffs. They didn't have anything in the AI category, but, you know, some of that's influenced by AI. You know, like pharmaceuticals, for instance, you know, where they're getting rid of people and using AI. How do we start to factor that in?
Bill Gates had a famous line about technology many years ago where he said over the next 3 years or so, it will underdeliver what you think, and over the next 10 years, it will overdeliver what you think. AI is big, it's coming. I just don't know if it's becoming right away. Quick word about those unemployment rates rising for young people that are just recent college graduates. If you break it down by sex, it's men that are soaring in unemployment and it's women that are not. Men overwhelmingly get computer science degrees, and that's really what AI is really impacting. You don't need coders, or you don't need as many coders, and they're churning out degrees with coding, and they're having a hard time finding jobs.
Maybe we can get them back in vocational classes, right? Back in the day.
Yeah.
I'm going to pick up on this women thing later on because there is a major change there. Great having you in the studio, Jim.
Thank you.
Thank you very much.